Okay, I retired October the 24th. It was a mandatory retirement. I was an airline pilot. You hit 65 like Cinderella, you're done. And what I'm going to talk to you and what I'm going to share with you is what I call the IRMAA Ambush. My real live lived experience. I went through this. I think I'm in a great place to tell you what to expect, what to do, what not to do. The shock is not that Medicare costs money. We all know that. The shock is this: your income drops hard when you retire. You shift into the retirement mode, and then Medicare prices your premiums like you were still living in your old work life, but you're not. What I didn't realize is how big that premium jump was going to be. I did not understand the timing of when you can start fighting it. And I definitely did not understand the 2-year look back where Medicare can bill you today based on income from 2 years ago. If you're a pilot or a boomer who retired right after a high income year, this episode is in your playbook. So what can you expect in today's episode? A couple things. First of all, we're going to really drill down deep into IRMAA. What does it stand for? Why does it exist? What's the 2-year look back? Let's look at married filing joint tiers and what max Medicare would look like. We'll look at some real numbers, how to avoid the reaction loop, the cleanest way to fight the IRMAA ambush if you were overcharged. What does that recovery process look like? And a quick note on the low income window before RMDs and Roth conversions kick in. All right, quick disclaimer, this is educational content only. It's not personal financial advice. It's not tax or legal or Medicare advice. Confirm your details with your Social Security agent, Medicare, and a credentialed professional. And shall we be clear about why I do this? I look at this as a public service style channel. I'm not selling financial products. I'm not soliciting for clients, and I'm not collecting your information. The goal is simple: help the baby boomers understand the rules so that they can keep more of what they earned. Don't be confused. I'll frequently refer to pilots. It's just synonymous with a particular tax bracket at the point of retirement. Okay, a couple of basic assumptions as we go forward today. The person in this particular instance is married, spouse is roughly the same age, around 67, and both are on Medicare, and both are filing MFJ, or married filing jointly. What is IRMAA? Well, IRMAA stands for Income Related Monthly Adjustment Amount. In plain English, it's an extra monthly surcharge added to your Medicare Part B and Part D premiums when your income is above a certain level. Important to note, IRMAA hits Part B and Part D, not Part A. Okay, why does IRMAA exist in the first place? The official logic is simple. It's means testing. Higher income retirees pay a larger share of Part B and Part D cost. It's also administrative simplicity. They use IRS tax returns because that is the most verifiable data they can get their hands on. And the 2-year lag exists for a really good reason, because that's where they can get the cleanest data from filings from 2 years ago. So why does this feel so arbitrary and capricious to a lot of retirees? Well, retirement is a cliff. Income can drop literally overnight, especially if retirement is mandatory. But the look back does not care. It bills you based on the past. That makes a lot of sense, doesn't it? So I'm not here to argue politics. I'm here to help you navigate the system that is, and to help you keep as much as your cash in your pocket as you can. Okay, it's time to talk about MAGI and taxable income for the rest of the show. MAGI, modified adjusted gross income. I'll just call it MAGI. This is where people get a little bit confused and occasionally make bad decisions. Taxable income is what your tax bracket applies to after deductions. MAGI for IRMAA is different. For Medicare IRMAA, MAGI is essentially AGI, or adjusted gross income, plus tax-exempt interest. So you can feel like you're in a lower tax bracket, but in reality, the MAGI number triggered IRMAA. All right, a little memory hook here. Tax brackets use taxable income. IRMAA tiers use MAGI. All right, now for the 2-year look back. And here's the mechanics behind what I call the IRMAA ambush. Medicare IRMAA is typically based on your tax return for 2 years. So your real life can look like this. 1 year you're in a high income state, then you retire, your income drops hard, but Medicare is still billing you based on the older return. For pilots, it could be even worse because retirement at 65, well, that's a hard stop. Your reality, that changes instantly. Here's the mindset shift that saves cash flow. If you wait until November or December when the IRMAA letters arrive, you're stuck in the reaction loop. The premium hits in January, and then you're fighting from behind. But if retirement is your life-changing event, you can often file as soon as retirement occurs. That gives Social Security a chance to process a new determination before the first January payment is ever deducted. Wished I would have done that, didn't do it. I'm not promising you instant results, okay? This is one of the largest businesses in the world is Social Security. I am saying this, proactive always beats reactive, every time. Let's take a look at my timing cheat sheet. That'll be in the description page if you want to take a look at it. Here are the typical calendar events that you should have in your head. Dates can vary by year, but the rhythm is fairly constant. CMS rates are typically announced in early to mid-November. Digital notices often show up in Social Security late November. That's on my SSA. That's what I'm referring to. Paper notices often arrive by mail in early to mid-December. And if you retired, the appeal and SSA-44 filing, see that in the description by the way, can be started anytime after retirement occurs. Don't wait to get organized, please. Numbers matter. Now let's take a look at them. How about the baseline standard? These are very important numbers. Again, baseline standard Part B, $202.90 per person. The Part D IRMAA is at this point zero, not for long. For a couple, baseline Part B is $405.80 per month. Now, a high MAGI example, and let's say around $500,000 married filing jointly, in that tier, Part B is $649.20 per person per month, and the Part D IRMAA now is kicked in at $83.30 per person per month. And what does that come to? $732.50 per month per person before your Part D plan premium ever kicks in. All right, how about a couple? That comes to $1,465 per month compared to $405.80 as your baseline. And what kind of an increase is that? $1,059.20 per month, or about $12,710 per year for the couple before adding your Part D plan minimums. Okay, now for what I call the Mad Max ceiling for Medicare. Top tier, Part B, $689.90 per person per month. Part D IRMAA is now jacked up to $91 per person per month. That's $780.90 per person per month before the Part D plan premium kicks in. And for a couple, you see the child when I tell you this. It comes to $1,561.80 per person, or $18,741.60 per year before Part D premiums kick in. That's the ceiling, and even if you never hit it, it's a good idea to know what the ultimate IRMAA tier is. How do you fight it? If your income dropped because you're retired, the cleanest path usually is the SSA-44 form for a life-changing event like work stoppage. The goal is not to send them a book. Please don't do that. The goal is to send a packet that is easy to approve. The SSA-44 completed clearly and accurately, or they will send it back or reject it altogether. Proof of retirement or work stoppage. A simple estimate of current year income reality. Supporting documents that match your package, and a one-page cover letter listing every attachment. For pilots, the gold document is often what's called the forced retirement or termination letter. That's because we were forced to retire at age 65 by law. That will remove any ambiguity. As for in-person versus mailing, choose the path that gives you proof and a paper trail. In-person can be great if you can get confirmation. Mail should be tracked. Good luck on that. First time I sent a letter, No response, nothing ever happened. It got lost in the mail, sent me back an additional 2 months. Faxes should have confirmation. Upload should have proof saved. The enemy is lost paperwork and dead silence. All right, let's dive into the SSA website, Social Security Administration website, for official IRMAA and SSA-44 instructions and forms. It can also help with office location, contact tools, and in many cases, verifying what is being deducted or billed. But do not expect Social Security Administration website to track your case like a modern package tracker on FedEx or UPS, or to automatically fix your premium just because your income dropped. Simple line here, the Social Security Administration website gives you the rules. It does not fight the battle for you. Okay, what do you do if you're overcharged? Let's take a look at that. And this is the question that everybody always asks. If they're overcharged me for a year, how do I get my money back? Well, when the determination gets corrected, the make whole can show up as a refund, as a credit against future premium bills, and or adjusted withholding if premiums were coming out of your Social Security check. The exact mechanics depends on how you paid. Your job is simple. Track the overcharges month by month so you can verify the correction matches what you actually overpaid. And that's why all of this matters. Let's take a brief look at the Roth window and RMDs. One last strategic note that I'd like to make after retirement and before RMDs begin, many people have a lower income window, okay? That window can be very useful for planning, including Roth conversions. But here's a warning label. Roth conversions raise your MAGI. MAGI drives your IRMAA, and IRMAA drives you crazy because that's the 2-year look back. So a conversion today can trigger IRMAA later on. This doesn't mean never convert. It's not what I'm saying. It means convert with the IRMAA tiers in mind. Let me close with this. I did what I was told to do for 36 years. I worked a career. I walked the line. I followed the law. I paid the taxes. I followed the rules. And I retired when they forced me to. And then I got hit with premiums that made it feel like I was still living in my old life when the life was already over. That's why I made this episode, not to complain and not to brag, not to sell you anything. I made it because the IRMAA Ambush can blindside good, well-meaning people at a particular time in the life when they really don't need the additional headache. The IRMAA packet that I talk about is going to be found in the description page. Every Sunday I look at all my comments for all my channels, and that's when I will respond to them. I appreciate your comments. And in closing, I do have to say this: health is wealth, wealth is freedom. Now let's get busy living. Take care. Thank you for watching.